Good morning, everybody. Welcome to the Flow Show. A new week awaits us. Hopefully, we're all going to have a good one, and I hope you are too. Good morning, K-Man. Good weekend, mate.
Hey, good morning, Ryan. Good morning, everybody. Have a great week. Starting on a pretty big euro note this morning.
Yeah, very much so. Quite a bit of euro strength around the grounds, which we shall look at shortly, obviously. Right, we'll get through some of the headlines and whatnot before we get stuck into the prices. Japan, apparently, according to the Nikkei, the BOJ is planning to revise its YCC, mainly down to what's been happening in the US and with yields. Apparently, they've already begun discussing their long-term and short-term interest rate control. That's the YCC. Because of long-term interest rates rising in the US and also now in Japan, getting up to near that 1% limit that they widened the band to in July. The Nikkei say that this is going to be discussed at the next monetary policy meeting, which is coming at the end of the month. But there are some within the bank who remain cautious, saying they want to closely monitor trends in wage increases. Not that you know that this potentially hawkish news or mildly hawkish news is affecting yen at all at the moment, particularly not dollar yen, which remains glued up near that 150. Anything you take from that 1K, that Nikkei piece?
Yeah, well, I mean, it all depends. I trust Nikkei is quite well informed. Yeah, we are apparently getting closer there to more normalization. We are seeing the yen is not supported by it, which is a little bit counterintuitive because if they start to mess around with YCC or whatever else, should be a little bit of a support for the yen, but it's not supported right now, and I reckon it's just because the rest of the rates sphere is moving higher as well. If you look at all the major yields are up again, so yen's not really finding support from it, but it's an interesting piece. And next week we get the BOJ, so that is likely going to see us speculate a little bit again to what they can do or not, and perhaps especially say or not say, right?
Yeah. I mean, this one was translated from a Japanese piece, but the sentiment in the story feels like it's a question of them being forced to maybe widen the band a bit rather than doing it for domestic fundamental reasons, which is not really the situation they want to be in. They'd rather be doing that because the fundamentals are aligning to say that they can ease up on YCC. So it's a bit of a it wouldn't be classed as a tightening move or hawkish move if they're doing it just because yields are blowing up everywhere else.
Yeah, it's your kind of Bank of England forced hikes also a bit similar, right? It doesn't really support the currency also because it's done for the wrong reasons, right?
Yeah, exactly.
Yeah. Okay. Yeah, I got what you say. But and against that, you got Kishida now coming up with this 3-year plan, saying that it's all going to be about the economy, and he wants to do plenty more of support and perhaps tax cuts, and I guess the market is taking it as, well, why would we buy yen if he's going to water down the public finances even more, and I reckon it's like somewhere one canceling out the other and putting UEDA in probably a rough spot again, because seeing their close cooperation, what they have been repeating since the start of UEDA's tenure, it's going to put pressure on him not to raise rates too quickly. So that's probably what the market is thinking of all of this.
Yeah, and because there's been a lot headlines on the government front as well, as Kay mentioned. He's apparently setting a 3-year goal to revive the economy. Will he last that long? Remains to be seen, because there was a couple of by-elections in Japan this weekend. 2 seats that were under LDP's power. One was in Nagasaki, which they won. That was a vacated seat. The former minister there, or MP there, passed away, so they won that seat. However, they lost in the Koichi Tokushima district to the CDP party. So that was seen as a bit of a kick in the teeth for Kishida. He said, though, after that, he's not considering the dissolvement of the lower house. That loss is prompting a bit of speculation about whether we're going to have a snap general election, as it always pops up when something goes wrong there. He did also say that the gasoline and energy subsidies are going to be extended to spring, so a bit of a confirmation what we already heard from there. So yeah, mate, some political stuff just raising its nose above the parapet at the moment. On that front, the Japanese other parties, the CDP, which is the Constitutional Democratic Party, has apparently agreed to cooperate with the Japanese Communist Party in the next election. That's according to Yuri. So yeah, there's some political waves being felt. So he may not get to his target of 3 years goal to revise the economy if he doesn't last the term.
Yeah, but that's the thing is, okay, we never say never, but the CDP is a well, it's like the DPJ completely exploded at some point, and there's a lot of fragmentation still around there. So I don't think, well, it's not that I don't think, but it would be surprising if the CDP and the Communist Party together could overthrow the ruling LDP, because the opposition is still so fragmented. But yeah, I mean, it could be that Kishida doesn't go until the end of his term, but then we have another LDP head popping up. It was always going to be difficult to replace Abe, right?
Yeah.
For anyone, and we know that in Japan over the past 3 decades, I mean, apart from Abe, they couldn't keep a prime minister in place for a term anyway. So yeah, it's a bit uncertain over there. But if you look at it a bit from the wider angle, I'm not sure whether CDP and others can overthrow the LDP right now. But let's see.
Yeah, I think it's more the case of if Kishida gets replaced, then we have to look at what comes from the new man who takes over. But yeah, markets don't like political uncertainty at the best of times. But another one of these situations we just have to keep an eye on anyway. But in other things anyway, the tax panel chief, as he's called, Miyazawa, said that they will discuss this period for income tax cut, but it will be common sense to cut it for 1 year. So again, this is part of the subsidies, cost of living subsidy type thing that they're potentially looking to do, a cut of income taxes over there to add to the energy subsidies. Right, moving on. It seems that Feds Bostic and Feds Harker have I reckon they've had a bet to see who can talk the most between FOMC meetings, because we've heard from them both at least 10 times, I think, since the last FOMC. Fed Bostic repeating doesn't think the Fed will cut rates before the middle of next year. He doesn't know if the neutral rate has changed, says it could be higher. Fed's Harker repeated again that it's time to keep rates steady. But he's hearing that the economy is softening faster than thought. That's something I'm going to look at in a moment. Fed's Mester says the Fed is at or near the peak of the rate hike cycle. She reiterates her outlook that it aligns with the Fed forecasts eyeing one more increase. That's all I got on the headline front. Cadence, you got anything you picked out the wood pile?
The rest is Middle East watching, right?
Yeah.
Situation is so fluid over there that we can hardly make any conclusions or so. But it is so that if you look purely at the market, we're going to refrain from too much how shall I say horror tourism or so. But if you look at how the markets react this morning, it's clearly a risk of move. Taking away the dollar out of the equation, we're seeing that the market is just not feeling it. Just looking at the S&P is going sub for 4,200 right now. That's not a really nice picture. I thought the Friday move on the S&P had a lot to do with the OPEX as well, and people perhaps not wanting any positions into the weekend. We're seeing a lot of those who are perhaps only involved in the second line in the Middle East. They are trying to calm things down, and but those like directly involved don't seem to be wanting to let things calm down yet. So we have to be very, very careful what's going on about risk. So that's basically been the headline stories over the weekend as well. But for the rest, no, very, very quiet actually, right? Bit of back and forth going on about who's going to be the next speaker of the House in the US. I don't know if that's holding the dollar from appreciating further. But that's looking like a bit of a pantomime that's not going to be coming to a close very soon. I think the guys over there have what is it? Put forward nine different names or so. I mean, I don't know if they can find an agreement on any one of them in the next 24 to 48 hours.
Yeah, I've had that one firmly in the ignore column. I don't care what they do about that over there. I don't think it's market moving. So until it is, they can get on with it. We've got enough circus acts going on here in the UK and elsewhere without worrying about what you Yanks are up to. So yeah, I've been ignoring that one. So yeah, okay, right. Well, let's take a look what's coming up this week, because it is a fairly busy week for the data. Not too busy today, not a lot going on, apart from the Eurozone consumer confidence flash. I can give you a heads up on that one. It will begin with a minus sign, and it's just a question of how minus it is. Over into Tuesday, we get the rest of the jobs report. We already had the wages data, which is probably the more important data, but we'll get the claimant count, unemployment rate, and that sort of thing coming in there. So a bit of risk for the quid tomorrow. But it is flash PMI day starting, we'll start our time in Asia and come through to European times. We've got all the European flash numbers, UK, US as well. That's tomorrow. Wednesday, got some Aussie CPI data. That'll be interesting potentially for the next RBA meeting. Then we have the Bank of Canada coming up on Wednesday. This one has a monetary policy report, so their revised forecast, which means a press conference from our mate Stiffers. Expectations for this one have gone well into reverse since the CPI next week. It's going to be interesting to see how Macklem, who was pretty hawkish in his last speech, now assigns the rhetoric as per that data last week, whether he just keeps up a cautious tone and keeps it a bit more hawkish in terms of ready to do more, whether he dials it back a bit. So that's going to be an interesting one for the loonie on Wednesday. Thursday, ECB day, which by and large should be a bit of a bore fest. They're on pause. There's no reason to do anything on rates. Inflation still going the right way, albeit maybe a little bit sticky. I think the only risk for the ECB is what they decide to do, if they decide to do anything on PEPP. I'm not sure whether this meeting is a bit early for actual decision on PEPP and all the rest of it, i.e. whether they increase QT. But it seems that there's a lot of governing council members who want to put it on the discussion table. So I think comments about that is probably about as hawkish as this one might get. But that said, QT isn't a huge market mover, outside of maybe an initial reaction as if it's seen larger QE seen as a bit more tightening. That hasn't tended to have any meaningful lasting effects on prices. Not when the Fed did it, not when the Bank of England did it. So maybe a bit of a knee jerk. If the euro's still looking a bit bid going into that, it might help it on its way a bit further. Durable goods coming up, and then that GDP number, the flash Q3 number from the US, and a ball busting 4.2% is expected for that one. So that is going to, I would say the data that we've had so far might back that up. It still seems a bit of a high print, 4.2%. I think we're currently, the last Q2 numbers, I think 2.4 or 2.1, something like that. So it would be good news to get a number like that and reaffirm that the soft landing narrative, or maybe even the no landing narrative for the US and the Fed, whose meeting is next week. As you can see, there are lots of other bits and pieces of US data coming out, but it'll be that GDP number that takes it. On Friday, we get the PCE data for September. This is a bit of a funny one because in the GDP numbers, they have PCE as well, which includes September, because that's obviously part of Q3, and this PCE data will come in for September. So I never know whether they have that in the GDP number. So sometimes when you get PCE after the GDP, it can be a bit hit and miss on whether it's a market mover or not. We are expecting PCE to tick down a bit as well, a point softer on PC and core. So we'll see if there is any variation to those numbers there. And that rounds up the week of data anyway, coming this week. Right, let's have a look at what's going on in markets. And yeah, a bit of a breakdown in the S&P through the big figure. A lot of people benign this number. It doesn't look good. I don't like it when a price moves away from a big level and comes back really quickly. Although I thought it might have a chance of holding because we've done a good near 200 pips so far on that. Is it going to hold this break though? I think if you start seeing resistance coming in against 42 and 42.15, then maybe we're heading a bit lower. That'll be a bit of a confirmation. And maybe we're going to move down to the 61.8 fib down in the low 41s. So if you've been long in this one, you want to be a bit careful if we start holding down here and finding resistance into these broken levels at this point around here. Gold has been that's the one I look at often now before yields. If I'm going to see what risk is doing, I'll take a look at what gold is doing first. It had that move up late on Friday afternoon again, probably just some safety parking, closing down of other assets and just parking it up in gold in case there's some risk. But it's washed out a bit into the close, maybe some profit taking in there as well. Came off when there was no big news or negative news over the weekend. Still not out the woods yet. I still don't think this is really for rally selling unless you're just going to scalp off the highs and whatnot. But be careful. Obviously, 2,000 is the big number above. We have gone below this 1985, which may become a bit of a ceiling if there's no further negative headlines. But all it takes is one wonky headline and we'll probably be up there back to the highs and through 2,000 anyway. So it's still tough to be to be short in this one unless you're really nimble, really quick and get out in the dips. I had a go last week and now took a bit off, got stopped on the rest. So yeah, watch your levels here. If you're scalping, then maybe good to go, but you don't want to be trying to sit in anything for too long or overreaching on your trades on that one. Yeah, so as Kay mentioned, the euro is, well, was, it's now falling out of bed. Had another move above 106. Again, got up to these highs around 106.15, just above that old fib level. So it's still struggling to make a real move above. And as we can see here, we're failing at 106 again. But the dips have been pretty limited down towards 70s and the mid 105. So there's no, it's looking, when you look at it a bit wider, it's a lot of sideways stuff going on here. We have got a bit of a bigger level around 106, 35, 40. For me, nothing changes until we're back above 107. Until we're back above 107, you know, this is going to stay pretty bearish. You know, we're not looking at breaking this trend just yet. And I think that's the important wider factor to keep in mind if you're trading in and around down here. Euro sterling. A lot of people in the room jumped on this bandwagon on Friday, myself included. I started buying it 87.20s, all the way down to the big figure. It's doing what it needs to do at the moment. It's holding the break of 87. Support coming in there right around the big figure. We've had another bounce, got back above this old level, which you know, we've been speaking about for months and months. It's put on a bit of a wider. So up here, this 87.20, been a long time wait for it to happen. We're just flip-flopping around at the moment, so it's still not decisive. I want to see that holding, and then we got to take out this fib at the next area. But, you know, really, if we're below 87, 86.90 is going to be a bit of a line in the sand. If we get under there, we're back in this old box again, and probably sitting with strumming our fingers on the desk again. But for now, it's looking a bit more bullish. It might just start to form a bit of a higher range and then go sideways from there on that one. Kay, did you have something to say? I heard you.
Yeah, there's actually two things. Well, first of all, a good few of us are on the euro sterling bandwagon again, me included. So it held where it had to hold. I just want to come back, and perhaps being on a euro cross is not a bad thing either. For this week's ECB, the fact that if they would talk about QT, so I think they've got about, what is it, 5 trillion or so in the books, or a little bit less now. And there's about, I think, naturally about 700 or 800 to roll off until the end of 2024. Okay, so more than a year from now. But it may have an importance on the euro this week if they would accelerate QT even without raising the rates, because it's been zooming in the background in bigger amounts at the Fed. And I do think that it is a part of the reason why US yields are tighter, why liquidity is tighter, why the dollar has been holding up. It's not something that we see every day, as you say, but it's something that's zooming in the background, and it's something that, you know, if you keep your sauce on a low fire, it just keeps it warm, you know. It doesn't get cold. So if the ECB would decide something on the APP, the PEP, the whatever else they use, then I reckon it may present another boost in those euro crosses, and I think I will really have a close eye on what the ECB decides, because earlier in the year they were hinting at making a decision on QT or the PEP or the APP in December, right? But if they bring it forward to this month, it's somewhere a sign, okay? And I will take it as a sign. It's not your biggest market mover in the immediate, but it's something that could just keep those euro crosses bid. And I reckon that's what we see now as well, because risk off, we have discussed about it a couple of times in the past on here. I've been saying about, like, watch out if it's risk off. It's not necessarily bearish euro, because it's euro crosses tend to go up because there's more liquidity in the euro dollar. If you sell off the Aussie, if you sell off the cable, if you sell off the Kiwi, euro will probably go slower. And that's exactly what we have seen again today. It's actually our third or fourth session already since last week, where we see exactly the same pattern in the morning in Europe. Euro dollar going relatively sideways or going up a little bit, but the rest of the dollars keeping a bit tone, right? And we look at the dollar yen even, we're back on 150 there, or just a few pips. So I just wanted to highlight this for people. If ever the ECB comes up with something on Thursday, don't dismiss it as just okay, they've done it, now what's next? You know, I think it could be a bigger move than what the market or that we could expect. You know, there's just my feeling about this particular point.
Yeah, thanks, mate. Yeah, well understood on that front. Yeah, it's good. Well, it's probably going to be our only source of moves on Thursday because it's very doubtful they do anything on rates. So yeah, I mean, I don't. You know what the ECB's like? They'll probably say it's up for discussion now with a view to do something in the new year. That's their usual way. They always have to wait for the next forecasts, don't they, before they make a decision.
Yeah, that's and that's then always coming back to the fact of it may be more important what they do not say than what they actually do. You know, that could
Yeah,
be the other one where if they don't do anything, then I reckon the
yeah,
euro. And then I think the more plausible, if the dollar is still a bit into Thursday, then the more plausible is that euro dollar gives up the ghost and starts to trade lower, right?
yeah, exactly, and which might give a bit of an opportunity to head back maybe down into the 105s because I don't. Even if they dismiss QT this month and we get a dip, I still think that down there that level is still valid for now. The way it showed up a second time around, we'll have to see. But we've got to keep an eye on the good old yields and 10 years knocking up through that 5% mark. But that's probably what's behind this just easing a bit in euro dollar, just a bit of dollar strength coming in on the back of this move. But again, you know, this could be a significant break of this 5% level, but it's not as if the dollar's screaming hard with it, really. Well, depending on where you're looking at. You know, just as we showed, euro dollar's pulling back a bit, but it's now, you know, it pulled back. Where did it pull back to? About 80s, 85s, 86, and then we're back up again. So, you know, it's not even that far, not even down to 90, and then we're moving back up again. So this moving, I don't know, is FX becoming a bit disjointed with yields now? Is the dollar becoming a bit disjointed with yields, or is it going to take? Yeah,
I think it's all in the differentials, mate. The rest of the yield sphere is going pretty parallel with the dollar ones. And I showed it this morning in the room again. If you look at the euro versus the US yield differentials, it's actually not moving much. If you look at the sterling differentials, hanging low but not moving much. And I'll show it if you want in a minute.
Yeah. In a minute.
I think it's all in the differentials right now. Because the rest is moving in tandem with the dollar yields, and that's what makes your dollar pairs perhaps less obvious to trade and where those crosses come into play. Or the market is then concentrated more on the rest of the instruments, like as you were highlighting in gold, and as you were already mentioning that the S&P is dropping through 4,200. It usually your correlation trade would be for a stronger dollar, but also stronger Swiss and stronger yen. But that doesn't happen right now. So the market is more concentrating on stuff like risk through the crosses. For instance, your Euro Rand, Euro Mex is really pushing higher. Euro Aussie, Euro Kiwi ditto, and then you have gold, silver, and the equity markets, and perhaps some moves in the oils, you know, and it doesn't necessarily create enough flows in the FX market to drive it one way or the other, because to drive the FX you need flows, right? If it's all going on on other instruments, but you don't need to use the FX funnel to hedge your exposure, it's probably going to stay a bit quiet on in FX land, and that's what we are seeing now. Albeit there's been a little bit of moves there right now in the dollar pairs.
Yeah, exactly. Well, I hand over to you in a second. I just want to look at dollar yen quickly. Again, it's still banging its head on this 150 level. Really is something going on here. Just to keep you abreast of what's going on, we do have a lot of expiries up here again this week, including on Friday, a large expiry going off there at 150 as well. So whatever's happening here, there's still a lot of interest, it seems, to keep the price below it. Still in two minds what happens on a break, whether it's an explosive break or it's a grindy break, a bit of a touchy-feely break, because the market's going to be worried about intervention again. I am in with some buy stops again. I'm going to see if I can tick the high again, like I did on that move there. I'll give it a go. It's just that it seems like the pressure's building. The dips, apart from obviously these spikes, the dips are still being bought. So it's either people selling option related up here and buying it back on the dips, or we've just got longs who are just not willing to give it up, and maybe we get a bit of a pressure blow this time. This move previously was a bit of a faster move up. Now we're doing the grindy thing. So I'd imagine stops are building yet again above here. So I'm gonna have a go with some buy stops again, just to see what happens. I won't be going anything big, that I can tell you, based on what happened last time. Kate, do you want to take a look around there? I know Roberto wants to look at the Swissy. I'm not sure the S&B is in anywhere there at the moment, but you never know with those guys.
Yeah. So let's quickly overview the differentials, because that's really where what's been driving lately, what actually been driving the relative stability of the major pairs, and just to look at two, not to take too much of your time. Okay, so the sterling and US here, it's hanging low, it's hanging wide compared to what we had before. So that is still weighing on the cable, or preventing cable from rallying too far, but it's not breaking new ground, and that's where I'm always saying. So watch out with those dollar pairs, because they're still trading very much those differentials, and we have the proof of it again. This is your dip towards the 121, and again, and this is your or just below, and this is the correction that we saw on Friday and stuff, and it's still respecting that, so we have to, you really have to keep an eye on it, to look if any move that you see in the pairs is viable or no, is viable or not, and that's really what's going to drive this market. And look at the euro US differentials. It's virtually not moving. So you have those euro crosses which are in play, which have driven the euro higher this morning again. But then against the dollar, there's not too much reason to really buy euros much more, because we're staying in this range, and it doesn't going to provide more flows. If you start to go tighter in the euro versus the dollar, that's probably going to be your 106.35.50 break here. I mean, I'm just front running the events a little bit if they would come, but if they stay here flat, I wouldn't be surprised if euro dollar just trades in a 70-80 pips range, right? This is not your only point of measurement. Of course, there's a lot more happening in the markets. But if you look at how the euro dollar has been trading, and you overlay it with this, you will see that there's a lot of similarities, right? So yeah, I mean, for me, it's still 35.50 on the euro dollar. If that starts to go, then it's probably going to go have a look at Ryan's 107, and why not even back to 108s, right? Cable is respecting this little bit of a channel, or whatever you may call it. bit of a flag, bit of a channel, I would say. Short term, it respected it. We came very close to this 85.95, 85.92 zone in the cable. That's your first level. If that goes, then we could be back at 122.25. But based on the data, I don't find too many reasons to outright buy sterling right now. So I reckon there's a retest coming of some sort sooner or later of the lows. But again, if it's not supported by larger or wider differentials in favor of the dollar, it could again be a bit of a range play here. Okay. Ryan already showed the euro sterling. It's 87, right? And as Ryan said, 86.90 goes back below there. I don't think there's much reason to stay long for longer in the euro sterling. Now euro yen. I've gone wider here. We've seen. Let me just show this one quickly. We've seen the euro is doing well versus really most currencies right now, and we are pushing in this euro yen as well. No exception. It can move around into next week, Bank of Japan, of course, but it does look like we're in for a test of the prior highs here, the August highs, end of August highs, sooner rather than later, because every dip is getting bought right now. And then if you look at it on the wider, you have the extension of this big corrective move here. The first one is around 160.75. 160 will be a bit psychological if we break above, and then you look at this level. If that goes, I don't know where this is going to stop, but probably 164 somewhere, this prior level. But first things first, okay? We have the ECB coming out, we have the PMIs coming out, we have Bank of Japan coming out. This could be a bit more the longer term view of things. But just to show you, this is still very, very big. And so are the rest of the euro crosses, ladies and gentlemen. Euro CAD is starting to get close to prior traffic zones, up in the high 145s, up to 145.90 here, 70.90. Keep an eye on that one. And this is just to show how big all those crosses are. If you look at the Euro Aussie has broken above the prior resistances, the prior high as well, and we are now pushing into the 168s, eyeing those prior highs here. Those have been rejected a good few times. High 168s here, 168, 80, 90, and then for those who willing to say that the euro may not stay bid for long, I know also. Father Ted in our room was just showing that the euro crosses are pushing against the cloud resistance. So this may be your level again around here to perhaps take profit if you're long, or try the other side. But then be careful if you break above 169.05. I wouldn't keep it, because that means 170 is in the cards. Euro Kiwi is even more spectacular. That's really broken through the 61.8 like if it were nothing. We're already trading very close up to the 78.6, 182.50, 60, and then 182.85 up to 183 is your next zone. But adjust these ones to show you what the other trade in risk pairs looks like, or can look like. That is that euro crosses are usually doing well when the market is trading quite big, and there's no other word for that, because it's a quite big risk-off move. If you look at the S&P now, we are below the 4,200, as Ryan already highlighted. This is a pretty big move. This is we can say this is the risk-off move. You know, it's pressed by higher yields, but also the Middle East situation. I think so far the earnings season has not bore any drama babies, but yet stock markets are coming off, and that's your risk of play. There is a bit of support here, but that's only a bit, 41.85. I think this this trend line here could also come into play, and this is in the low. So 41.5 to 41.40 is a level to watch on the S&P, I would say, to start this week. I've yeah, this gold 1900. The one that is not continuing to follow the gold move, we had this spike higher on Friday, is silver. We are sorry, holding below this 23, 40, 45 zone, which to me is a zone that should hold for silver to push higher. But with the uncertainty that is hanging around now, I would not be pushing my silver position to seek for higher levels. I first want to see how the situation in risk is going to unfold. So I did take some off the last week around 23.20, was it? And I'm waiting. I'm just waiting here. Swiss, that was the other question. Well, the problem is if you trade dollar Swiss is offered because euro Swiss is offered, because sterling, Aussie, whatever, you name it, Swiss is very offered. But the dollar Swiss is a difficult one to trade because if the rest of your dollars are going to push higher because of yields, because of lower risk, because of this and that, it's probably your less clean trade here. So keep an eye on what's going on around 88, 90, 89, the figure on dollar Swiss. It could just support and trade more sideways. Euro Swiss is still trading very heavy despite euro demand. Euro Swiss is really getting closer and closer to those September 2022 lows, right? We haven't heard anything from the S&P yet. They may start to find that let's not forget that they've been selling euro Swiss all the way down, right? And euro and dollar Swiss all the way down because it's their firm belief that stronger Swiss is fighting against inflation. But I'm still looking to see when they are going to say whether it's enough or not. So I think this euro Swiss can tap your 94, the figure. But I don't know what was there a specific cross that was required or not? Just look.
No, just Bertrand asking about Swiss in general.
Well, I mean, yeah, it's all about whether risk is going to continue to be heavy or not. That is your main question. If it continues and it looks like the start of the week is not good for risk because everything is coming down now in the equity market sphere as well. This could push through. You know, I'm not even sure. We are at all-time lows, so I'm not too sure whether this can go. I see here an extension in the low 92s. I'm not trading it right now because it could easily, if the situation quiet down, it could easily do 100, 150 points back higher. So I think I've said enough for the start of this week. Again, I don't have too much of a position. I'm long euro sterling, but I don't have too much of a position in the rest of the Eurosphere. But I think the what's going to happen on the PMIs and on the ECB this week could be maybe enough to break the range right now. No, Ryan is still interested in buying it close to 105. It's actually pretty cool because you do have your kind of a protection there around in the high 104s. And if euro holds again this week around that lower level, I think I might actually join you because the euro is looking relatively okay to me compared to all the rest. Just a quick one on the US 10s then. If we start to hold above 5%, this is your pre-global financial crisis level, 530. And could be we going up there, you know, that's another 30 BPs. And I think these 30 BPs, and I've been saying in our face as well, and this may be why the equity markets are now really feeling the heat. These could be painful if we do those 30 BPs. That's what I'm thinking, because that is pushing, that's going to tighten liquidity even more. We are close to flat, where we were like more than 100 BPs wide between the US 2s and the 10s. We are only 11 BPs now wide, okay? If this goes to 530 without the 2s really following, we could go into positive territory. So watch out, because there could be a bit of pain to be taken there. Back over to you, Ryan.
Thank you very much, mate. And yeah, on the euro, I'm apart from my short dollar China, I'm all long euro sterling. I'm still long some euro dollar 105.07, so I'm holding on to that. I got rid of all my middling exposure there last week, but yeah, happy to stay long there and keep my euro sterling from below as well. And yeah, we're looking to see if these moves sustain and it keeps going up. Ali, last question. Okay, you have a last question. You place your stop above if the trade goes into direction, but what about support resistance where you place the trade first? Right, so what I tend to do is, it's not a question about moving my stops up. So let's take let's take the dollar yen. Okay, so
yeah, I think Ali is asking about that about his euro sterling position, but I think 10 pips.
Yeah, it's the
not
same
worth
thing.
Changing your stop, you know.
Yeah, let me share the screen just for an example. Okay, so it doesn't matter what the trade is, euro sterling, whatever. Okay, so in this case, I'm looking to get in with a buy stop at 15 again. Okay, let's say I get triggered at 15. Okay, if it moves up to 25, 30, I'm going to take some money off the table. As soon as I do that, I've got to stop at 149.75. As soon as I do that, I'm going to bring my stop up. It might not go to break even or entry, but I'll just start bringing it up as a reflection of what I've made on taken some profit. Okay, so all that's doing is it's reducing my risk. That's my whole point. I've taken some money off the table. Let's say I've taken half off the table for 20 pips. Okay, then I can move the other half up at least 20 pips. Okay, so now if I get stopped, I'm flat. I make zero, but I don't lose anything. That is always my first concern with a trade. Okay, it's not about how much I make. It's about I want to get my risk to zero as fast as possible. And then let's say it moves up to 150.50. Fine, I can bring my stop up maybe just below the 150 area or just above it. Each time the price moves up, if I take profit, I'm bringing my stop up as well. Maybe I keep it 50, 60, maybe even 70 points behind the price. But just keep moving it up. And all I'm then doing, once I get a stop, I've moved my stop. If the market's gone well enough and I've moved my stop above entry, all I'm doing is locking in profit. Doesn't matter what the price does then. Hopefully I want it to keep going up. But if it doesn't, then it comes back down. I maybe got my stop 10 pips in profit over my entry price. So it's all about getting the risk to zero, then looking to maximize the profits. So that doesn't matter whether this is a big support level. If I'm long, I don't care if my stop's 5 pips above it. Usually I'll take it into consideration. So I might keep it 5, 10 pips below until the price has really moved higher. I'll look at it that way, but I don't care about the stop as long as it's knocking down how much I can lose. That's the most important thing. So that's how I tend to trail my stops. And it's something that not a lot of people I know do use trading stops and moving their stops. It's just as important as it is taking profit to get your stops up and lower your risk. Anyway, that's the way I do things. All people are different and have different approaches. But anyway, we shall call that a day for today. We'll get you set up for the week and we shall go through the rest of it starting tomorrow. So have a great week. Have a great day, everyone. Thank you very much, K-Man, and we'll see you tomorrow.
Thanks, Ryan. Have a good week, everybody.